Good day, ladies and gentlemen. So this particular video is inspired by a subscriber that actually wrote in the comment section that he would like to know what an implied fair value gap is. Okay, so implied FVG is what I'm going to be talking about in this video. It's going to be a short video because I'm going to just go straight to the point and give you an example of what an implied FVG is. So I believe you already know what a fair value gap is. It's a gap created by a three candle system whereby the wick of the first candle does not intersect with the wick of the third candle, okay, leaving a gap in the middle. All right, so basically that's what a fair value gap is. So what's an implied fair value gap? An implied fair value gap actually takes place when you have three candle system as usual, but in this case the two wicks, that's the wick of the first candle, which is this first bullish candle, intersects with the wick of the third candle. Okay, so these are the three candles I'm talking about. This is candle number one. Okay, this right here is candle number one, this is candle number two, okay, while this one is candle number three. All right, so those are the three candles, and you would notice that candle number one, its wick actually does what? The wick of candle number one intersects or touches the wick of candle number three, which is not supposed to be if you're dealing with the conventional fair value gap. So how do you now draw out an implied fair value gap with this? For the implied fair value gap, what we focus on are the wicks. Okay, we focus on the wicks alone. Okay, so you're going to focus on the wick of the first candle and the wick of the third candle. Then you try to gauge the 50% of the wick. So you start with the first candle, 50% of the wick of the first candle, you place an horizontal line there. Then 50% of the wick of the third candle, you place an horizontal line there. That will now give you a gap in between, which is going to be your implied fair value gap. As simple as that. When price comes back there, you treat that level just as you would treat a fair value gap. And if price disrespects it, you treat it as you would treat an inverse or inversion fair value gap. You understand? So that's just what the implied fair value gap is all about. Okay, so let me quickly show you how to do it. So you can see this candle, this is the one I'm dealing with now. I'm dealing with this particular candle, the first candle. So I want to get 50% of its wick. You can do this with your own, you can just use your eyes to gauge it, or if you want to be very accurate, you get a Fibonacci, then you fib the wick, then you place an horizontal line on the 50%. But personally, I like gauging it with my eyes. Okay, I'll just look at it and just know that okay, half of that wick should be somewhere around here. Okay, somewhere around here. So that's where I'm going to place my first horizontal line. Then you go to the third candle, the wick of this third candle, half of it, you want to place an horizontal line at the level. Okay, so you gauge it, then you place it right there. Okay, so this is what I'm looking to actually trade. All right, so I have it now. This gap is what we call our implied FVG. So when price returns here, we are looking to take a trade, a buy trade, because this is a bullish implied fair value gap. Okay, so let's see what happened. This is actually on Friday. So on Sunday, as usual, when market is about to open for the new week, most times a gap is created. So the gap went over the implied FVG, and you also had another gap forming. We had another gap forming here, going over the implied FVG. But later, price came to respect the implied FVG. Look at this. Price came and respected the implied FVG, tapping into it, not going beyond it, and then shooting in the upwards direction. Can you see that? So market shot in the upward direction after tapping at the top, after tapping on the top of our implied FVG. I hope the explanation is clear. You have an idea of what an implied FVG is. You simply need three candle system that would have normally formed the fair value gap for you, but when you check, you notice that the wick of the first candle intersects or touches the wick of the third candle. You can still form an implied FVG from it by simply taking and horizontal line and placing it at the 50% level of the wick. The wick is what you are checking is 50%, not the whole body. Okay, it's not the whole candle, just the wicks. So once you do that, you are going to get two horizontal lines with a spacing between, which is your implied FVG. All right, so if you need me to actually talk about any concept you don't understand, just drop it in the comment section. If you are a new viewer, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.